loan from the relatives and friends, which comes under the informal sector, as these loans are easily accessible, cheap, and mostly freely. Use of credit. Now, it is seen that 35% of the loans taken in the rural areas were used for productive purposes, whereas 55% of the loans taken in the rural sector were used for unproductive purposes. And 8.5% of the household have used loans for both the purposes. Now, going by the asset and debt status of the household, the average asset value for the rural household of Kachha stands at rupees 46
Yes,
lakhs.
you have 2 minutes of time.
Okay, ma'am. Okay. Rupees 46 lakhs, and the average debt amount turns out to be 2 lakh 34,000, and which is close to the northeastern and the state average. The average amount of outstanding debt stands around 1 lakh 86,480 rupees. Now, the intensity or the magnitude of indebtedness in the region has been calculated using incidence of indebtedness, which shows the percentage of household who are currently indebted. So, out of 202 household who have 45% of this household are still indebted. Kachar, this is significantly higher compared to the northeastern and the state average. This is because during the recent COVID-19 pandemic and due to the Kachar floods of 2022, the household have witnessed negative income shocks. Again, in addition to this, a motive to seek a alternative livelihood option has uh, boosted the purchase of e-rickshaw on credit, and has also contributed to the high IOI levels. And again, pay later schemes and EMI scheme have also contributed to the high levels of IOI schemes of this levels of this district. Now, going by the consequence of indebtedness, it is seen that 41%
Yeah,
of
I think Sujit, you can stop. I want to understand what is the innovation in your study.
are you asking about the research
Yes,
app?
I mean, what is that you are able to study? There are tens and thousands of studies which have been done on the rural credit per se, but what is so unique
Actually,
about your study?
our my district, which is Kachar, is basically located in a separate agro-climatic zone. But here, no studies has been done regarding the rural credit structure and the effects on indebtedness and asset status of the households. So I have mainly done the work on this. This is my research gap, ma'am.
Okay, and what are the names of the statistical tools that you have used to analyze your data?
Currently, I have only done the descriptive statistics using Stata.
All right, thank you. Good work. Please keep up the good work.
Thank you, ma'am.
So next we have, as per the schedule, we have Daisy Basista from Vipuria College. If she is there, then she can present paper. Yeah. So Daisy is not there, so we can move to the next. Next we have a in 5 number series, serial number 5, S. Prudvi Raj from Hyderabad.
Yes, sir. Yes, sir. I'm here.
Yes, you can present your paper.
Good afternoon, sir. Good afternoon, ma'am. Am I audible?
Yes, you are.
Wait a second, ma'am. I'm sharing my screen. Ma'am, is my slides are visible, ma'am? Hello?
Yes, visible. Please go ahead.
Yes, ma'am. Good afternoon, ma'am. Good afternoon, sir. First of all, thank you so much for giving me this opportunity to present my paper on comparative analysis of selected mutual funds. So, my name is Prithvi Raj. Currently pursuing my PGDM in Shvishan Institute of Management. And it's a great privilege for presenting my research paper, Viksit Bharat 2047, Emerging Momentum. So, when it comes to mutual funds, as we know, mutual funds are pooling money from investors, and these are the pooled money will be given to the fund managers. Fund managers invest in different securities, and based on the returns, the investor will go through whether they want to invest or not. And this is the main ideology of the mutual fund. These are the table of contents, and the importance of studying mutual fund risk and return performance.
Come to the objectives of your study, please.
Wait a second. Yes, ma'am. Ma'am, my objective is that analyze how selected mutual funds perform in terms of risk and return. I have compared bank AMCs and non-bank AMCs. AMCs are nothing but asset management companies. And I have evaluated the stability and profitability of selected mutual funds by using risk and return measures. And my final agenda is to help investors make informed decision on which type of mutual fund suits for the financial goals. And this is my data analysis. First, I have taken 4 months of time to analyze these, and based on the performance, I have given ranking. I have taken these as a constraints like a standard deviation, beta, Sharpe ratio, Trina ratio, Jensen alpha, R square, and I have added additionally capital asset pricing model. Based on that, I have given certain rankings, and based on the rankings, I have analyzed this. Like first of all, when it comes to performance, non-bank AMCs non-bank AMCs are performing excellent than bank AMCs. When it comes to volatility, non-bank funds are more stable during market fluctuations. When it comes to return, non-bank AMCs generate superior returns, while bank AMCs underperform, especially in the large categories. These are my findings. Non-bank AMCs offer more stability, better returns of risk, and a stronger market alignment than bank AMCs. They are better choice for seeking consistent performance and higher returns, while bank AMCs may appeal to more conservative investors. So the gap in my research is actually no one has earlier done this kind of research. So this is the gap. And when I reviewed so many articles, no one has earlier taken as a capital asset pricing model as their constraint, but I have mentioned that also. Based on that, I have given certain rankings. And that's it about my presentation, ma'am. Thank you so much.
Yes, Prithvi, appreciate your time management skill. Want to understand how many AMCs have you considered?
Ma'am, four of bank AMCs and of non-bank AMCs, ma'am.
Okay, so today.
In bank AMCs, SBI, Axis, ICICI.
Yeah, that's okay. And
Yes,
what
ma'am.
was the time period of your study?
2019 to 2024, ma'am.
Okay,
For
good. Thank you.
analyzing data, I have researched on Amphi for these details, ma'am.
Okay, appreciate your work. Thank you.
Ma'am, I need feedback, ma'am. Like, where can I improve better?
So instruction was given at the beginning. You can connect with me later and we can discuss further.
Sure, ma'am. Thank you so much, ma'am.
Okay, so we'd
Thank
like
you,
to
sir.
thank Prudhi. Okay, yeah. So next presenter we have with us is Janvi Henry from Nagaland University. Janvi, are you there? Janvi, are you there? No, no. Next. Okay. So next we have Mani Abhishek, the student from Hyderabad. Are you there? Mani Abhishek is also not there. Next. Next we have Suvid Datta and Megnadi from Assam University Dibu campus.
Customer, engagement to Instagram advertising insight. So, you, uh, Mani, can you please unmute yourself? Yes. 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 Yes.
Also note that Monal Singh, PGDBM student from Institute of Management, Hyderabad.
Good morning, sir. Good morning, ma'am.
Okay, yeah, please. Go ahead.
Am I audible?
Yes, you are, Monal. Please go
You're
ahead.
audible.
Yes.
Share your
Yeah.
screen. Yes, it is.
Hello. Yeah. Good morning, everyone present here. I am Monal Singh from Shivashivan Institute of Management, and thank you for the opportunity for presenting my study. My study is about ESG practices by Indian corporate firms, a study on retail sector and manufacturing sector. The introduction in today's ESG practices are
Come to the objectives of your study.
explore ESG reports practices in the Indian retail and manufacturing firms and compare ESG practices between two sectors, identifying difference and patterns in sustainability efforts. Here, this is the methodology. I have taken a hypothesis 4, where is environmental social governance, which scores does not differ significantly between retail and manufacturing sectors. And this is a data analysis which I have done. Here, I have used Excel and data statistics, and I have used scores Crystal Scores website for the data, and I have done the t-test also. The conclusion of this article will be the manufacturing sector leads, but the retail sector has room for growth. Broader studies across more sectors and longer term frames are critical to fully understand ESG's long-term impact. This research lays fundamental for further exploitation into responsible investments and sustainable business strategies in India. Thank you.
Okay, so you, Monal. So, ma'am,
Yes, Monal, you're. No, just a minute. I'll just have a word with her. You have
Yes.
you picked up a very relevant and a pertinent topic to study, but I'm sure that in ESG related area, a lot of studies are going on. When you say retail and manufacturing, then pertinent comes out. You should concentrate on those
Okay.
aspects. And beyond t-test, try and look for some advanced statistical tools which you can use to compare
Okay.
the data and the values of these two companies, that is the scores.
Okay.
Okay?
Yes, ma'am.
Thank you.
Thank you, ma'am.
okay, thank you, ma'am and Monal. So, we have our next presenters, Megde, a professor from
Yes,
accountancy
yes, sir. Am I
degree in
audible,
accounting.
sir?
So, yes, you're audible.
Okay, sir. Sir, actually, due to some problem, I am logging from my colleague's laptop. Um,
So, good morning, sir. Sorry to interrupt, but I think in the order that you have given, it's me after Monal Singh.
Yes, you are there after Monal. After this Meghna, you are there. Okay, so you'll be ready for the
Okay,
next.
okay, sir.
sir, sir, is my screen visible?
No, madam, you are not visible. Your screen is not visible. Please share your screen.
Yes, sir.
Or if you're not able to share, then you can go ahead. Okay, it's visible now.
Okay. So, Good afternoon, sir. Good afternoon, ma'am, and my co-presenters. Today, I am going to present a paper on the impact of um, banks' performance and impact of merger on banks' performance and efficiency, especially a study on Canara Bank. So I have co-authored this paper with my PhD supervisor, Dr. Suvik Dutto, Assam University, Tifu campus. So basically, in introduction, I will not go through this. So we all know how banking sector is
You have
integral
a
part of
blank
this
screen
country.
in the share. Madam, you have a blank screen in the share, so your data are not coming.
Okay, sir. Sir, 1 second. I'll try once again.
Yes, now it is visible.
Okay, sir. So we all know how banking sector of a country is integral part of the country. So in my study, I will try to cover the impact of merger on banks' performance and efficiency. I have already done a few literature review on this, but what's happening here? Sir, okay. So I have done quite a few literature review. From the literature, I have already understand that so many studies have been already done to judge or determine the performance in post merger or even after before that also. But as far with regards to my study, I have not found any study that has been done specifically to Canara Bank. So my research objective based on my research gap are I have two research objectives. First one is to examine the impact of merger on Canara Bank's performance and efficiency, and the second one is to compare pre and post merger performance of Canara Bank. Based on those objective, I have developed two hypotheses. First one is there is no significant impact of merger on Canara Bank's performance and efficiency, and the second one there is no significant difference between pre-merger and post-merger performance of Canara Bank. So through my study, I will try to prove this hypothesis. So research methodology that I have adopted for my study, I have used descriptive as well as analytical research design for present study. The sample of my study, I have already referred that I have only taken consideration the Canara Bank, which is the fourth largest public sector bank post merger. I have used secondary data for the study, and those secondary data I have mostly collected from bank's annual report. Then a few things I have gathered from newspaper article, research articles, and other published journals, etc. So period of my study covered a period of 6 years, 2020, 2017-18 to 2020 to 23, which is divided into 3 years before and 3 years after the merger. Tools and techniques I have used for my study is I have applied here camel approach to judge the performance of the bank. The camel approach, each of the parameter of camel, I have tried to
Yeah,
justify.
Meghna madam, you have 2 minutes with you.
Okay, sir. I have tried to justify with three accounting ratios. I have used descriptive statistics and have performed pair case test. So this is the table of analysis. So from there, I would like to jump to my findings. In terms of capital adequacy, we know Camel that judges the capital adequacy, asset quality, management efficiency, earning quality, and liquidity position of any firm. So I have applied that model, and accordingly, I have found that capital adequacy, in terms of adequacy, I have used capital adequacy ratio, tier 1 capital ratio, and leverage ratio. So it has been found that CAR, that is capital adequacy ratio, has been maintained as per the Basel III norms and has improved during the study period. Tier 1 capital ratio has also increased, but in regard to leverage ratio, the bank has no debt instrument during the first 2 years of study period. But post that, the bank tried to maintain the minimum leverage ratio 3.5 as a credible supplementary measure to risk-based capital requirements. As part to capital asset quality has been seen that asset quality of the bank has improved. Both gross profit, gross and non-performing asset, as well as net non-performing non-performing asset ratio has declined, and their provision coverage ratio has improved. So I will just jump to my final conclusion. So by going through different parameters of camel, I have found that the different parameters of camel corresponding to their different ratios has shown fluctuating result. But improvement onwards 2020 to 21, that is post merger, has been noticed, but the improvement or the changes are not that significant. So p values of most of the ratios of different parameter is less than the significant value. So uh, as per that, I can say that there is change, but there is no significant impact has been found on the performance and efficiency of bank post merger during my study period. I will like to stick to that. And the second one is also the difference between pre and post merger performance is also not that significant during the study period, though there is scope that in long run, in near future, we may found a better result. Thank you, ma'am. That's all.
Okay, so madam, are you there? Since he is not there, okay. So to your question, like bank merger, right?
No, no,
So
I
you,
am here. I am here. I am here. I've
okay, ma'am,
heard.
yeah,
I
please.
I got logged out and then I'm logging in from my personal hotspot. Some technical issue, but I've heard Daisy's presentation. Good work, and she should be, going into a little more depth, taking up more variables to study about the impact of bank merger, which will bring out innovation in her study.
Okay, thank you, ma'am. Sure, I will take it down.
So thank you, Magna. So next presenter we have Darul Moksa,
Excuse me, sir.
student. Okay.
Sir, this is
Yes, sir.
Abhishek. I have mentioned my roll number. Can you please, can I continue my presentation, sir?
No, are you Darul Moksa?
No, sir, I am Abhishek, sir.
So you are the next from the Darul will present. Darul will
Okay.
present. Darul, you can open your as I gave you time earlier. Darul, are you audible?
So your voice is not audible, sir.
You are audible. And
So
next, I would like to
let
request Palanki to be ready for the next presentation. Darul, you're there. You're audible.
yes,
You can present.
yes, yes. Just give me a second.
That's what we've been telling you, that it is not working out. So let Abhishek, and then you come. You are saying, give me a second, and still not able to share your screen.
Is it visible? I'm sorry, ma'am. Is it visible now?
Yes, yes.
It is.
Okay, sir. So, good afternoon, sir. I'm Moksha Darul from Shivani Institute of Management. I'm currently pursuing my post-graduation diploma in management in banking, insurance, and financial services. So, my research topic is influence of foreign institutional investors on the Indian capital market. Uh, so, foreign institutional investors plays a significant role in Indian capital market, and it enhances market liquidity and debt. Where I find the research gap is during the COVID and post-COVID, how was the FII how does FII impact the Indian capital market? This is my objective, and that's the research gap I have found. So I've analyzed FII investment patterns before, during, and after COVID-19, and also understand the role in market recovery. So FII is basically they are the foreign institutional investors who invest in Indian capital market, and the main objective is to analyze the FII investment patterns and to evaluate evaluate the role in market stability, and also to address the research gap. While I have also studied the previous 10 years data, and the sources are Nifty 50 and Sensex. So the FII role in Indian capital market is FII includes hedge funds, mutual funds, pension funds that invest in Indian equities and debt. They also contribute significantly to daily trading volumes and sectoral growth in industries such as IT, healthcare, infrastructure. Additionally, FII promotes corporate governance by encouraging financial transparency. So they are highly responsive to global economic conditions, leading to fluctuations in investment trends. So FII market behavior during COVID-19. So during COVID-19, we observed initial withdrawals due to uncertainty. There was a market crash, and Sensex and Nifty saw a step in declines. So FIIs later reinvested, but during COVID, there was a downfall in the market of FIIs in Indian capital market. The research methodology I've chosen is secondary data, where I took SEBI, NSE, BSE data, and the time period is Jan 2020 to December 23. Actually, it's pre-COVID is before 2020. During COVID crisis is 2020 to 21, and post-COVID crisis is 2021 to 23. These are the time periods I have chosen, and the methods are quantitative as well as qualitative analysis. So the data analysis is where I have done my correlation analysis. Sorry, sir.
You have 2 more minutes left
Yes,
with
sir.
you.
Yes, sir. I'm done, sir. So we have observed a massive withdrawals in quarter one, and there was also a sharp rebound post pandemic. The the market performance during the COVID wasn't that good, but post COVID it has been developed. The correlation with FIIs has strengthened post pandemic. The government policies and FIIs boosted this growth. So whereas I've done my correlation analysis, this is the calculation I've done. So COVID period, it was moderate, and post COVID period, the market, Nifty, the FIIs. I draw the conclusion that FIIs are the key drivers of market liquidity and stability. Where during COVID, because of the crisis, the impact on it has been decreased, but later on they performed well. So, and also there's a long-term investment should encourage for stability in the market, and thus we can say that FII's investment impacts Indian capital market a lot, and it is very important. FI play a vital role in Indian capital market, and these are the references where I've chosen selected my data: SEBI, NSE, BSE, and I've gone through various articles from Google Scholar and different
Okay, thank you. Over
websites
to you,
available on online.
Lina madam. Over
Thank
to
you,
you.
sir.
Thank you.
Thank you, ma'am.
Okay, thank you. You can proceed to the next presenter.
Okay.
Thank you, sir. Thank you, ma'am.
Next presenter we have from the same institute, Shivani Institute of Management, Revati Palanki. Are you there?
Yes, sir.
Okay, you can present your paper.
Yes, sir. Give me a second.
I request all the presenters to be ready with your file so that you can quickly present your paper or slide so that there will not be any issues in the technical. Abhishekji, you are at the last, so you have to wait for some time.
Okay, sir.
Sir, is my screen visible?
It's visible. Let's go ahead.
Okay, sir. So, good afternoon, sir. Good afternoon, madam, and my co-presenters. I am Revati Palanki from Sivasivani Institute of Management. I am currently pursuing postgraduate diploma in management, specializing in banking, insurance, and financial services. So, my paper is on risk and return analysis of various stocks of companies. Just a second.
You stick to the title, objective, then finding and conclusion. Okay. You have to
Okay,
rest
sir.
within 5 minutes.
So, objective of this study is to this study aims to examine the risk return and relationship within the Indian stock market, focusing on three companies that are Cipla from pharmaceuticals, Tata Power from the energy sector, and InfoEdge representing digital services. So, coming to research methodology, this research employs a quantitative approach analyzing historical stock prices from 2020 to 2024, sourced from investing.com, and I had examined daily stock prices to understand market trends. So, the key metrics include standard deviation for risk, percentage change in stock price for return, and beta to measure market sensitivity. So limitations of this study is it is heavily dependent on historical data, that is secondary data source, and this research lacks fundamental analysis, as I am only considering the historical prices to analyze stock market movements. So, comparison of stock performance, starting with average return, Power demonstrates the highest profitability at 3.514%. Cipla and InfoEdge show similar moderate returns around 1.9%. And Tata Power is the most stable with the lowest volatility. Cipla has higher volatility, while InfoEdge is the most volatile, indicating a riskier investment. Beta values indicate how sensitive the stock is to market movements. Tata Power and Cipla exhibit minimal sensitivity, while InfoEdge is slightly more reactive but remains relatively stable. So, all three stocks generally move in tandem with Nifty 50, the Indian stock market index. InfoEdge exhibits the highest degree of market influences. Investment options comparison. So, comparing the all three companies, Cipla offers moderate returns with high volatility but low market sensitivity, making it a good choice for diversification. Tata Power provides the highest returns with low volatility and minimal market sensitivity, positioning it as the safest investment option. And InfoEdge offers moderate returns but has the highest volatility and a high beta value, that is market sensitivity, indicating a riskier investment with the potential for significant gains or losses. So, concluding with Tata Power is the safest for conservative investors, while Cipla diversifies the portfolio, and InfoEdge can be for the high risk taking investors. Yeah, so thank you.
Okay, so thank you,
Hello.
Revanti. So over to you, madam. Yeah, Lina, madam.
Okay, thank you, Revati.
Okay, so we have another presenter from the same institute, so KV Vara Prasad
Yes, sir.
from the Sivan Institute of Management, Hyderabad.
Yes, sir. I am Prasad. Am I audible, sir?
And
Yeah,
Dr.
you're
Raju,
audible.
you can also announce that as all are from the same institute, they can skip introducing themselves. We have that list. We know. They can just
Okay,
say their name, then they start.
so paper presenter have already heard ma'am's what ma'am said. Okay, so next also we have with us the Puspa Chaudhary from the same institute. So Mr. Prasad, you can proceed for the presentation.
Yes, sir. Sir, I have done my research on analyzing the impact of PE ratio on intrinsic value of firms, which is on three distinct sectors. And these are the tables of content. And the introduction is what is the price to earning
Please
ratio
come
and
to the
intrinsic value.
objectives. Prasad, please come to the
Okay, ma'am.
objectives of your study.
Objectives of my study is to evaluate the relation between the price PE ratio and intrinsic value of firms across three distinct sectors, and to compare the impact of how PE ratio is impacting on intrinsic value of companies and within the each sector, and to identify sector specific trends and patterns in correlation with PE ratios and intrinsic values, highlighting key drivers of valuation differences. And this is my research methodology. This research was conducted on Indian stock markets. Uh, which can be accessed in NSC and BSc website.
Please come to your conclusion.
And I have taken three sectors which, and this is the data analysis of market value and intrinsic value. And these are the findings and conclusions, in which FMCG sector from the given sample share prices are most oftenly deviated to the undervaluation, where Britannia is slightly overvalued and Colgate is overvalued, indicates that caution for the investors. And in consumer durables, from the given sample share prices are mostly deviated to the overvaluation. And Tech and Dixon Technologies are highly overvalued. So the investors should be cautious before investing in this sector. And in banking sector, the share prices are mostly deviated to the undervaluation, indicates that buying potential, and SBI share price is slightly overvalued, and this sector is good for investors to invest in their growth potential. And conclusion, the critical observation is phenomenal of herd behavior among the investors, where to purchase stocks is driven mainly by attraction of market sentiments and momentum rather than the rational assessment of financial metrics like PE and intrinsic values. Company with high PE value ratios such as Nestle and Dixon Technologies are attracting investors only because of the market buzz rather than the solid financial performance, which is the key cause of overvaluation. So the choice when it is to sell or buy become a feature of their comfort or distress when faced with adaptive trading. Thank you, ma'am.
Okay. Thank you. Due to the time constraints, so I could see some hands raised, so we are not able to respond them. So we are going to the schedule only. So, madam, over to you if you have anything.
Right, fine. We move ahead with the next presenter. All Q&As can be taken up offline. You can connect with the participants and go ahead with your discussion.
Okay, ma'am. Thank
Okay.
you.
So next presenter we have Puspa Chaudhary, student, and Gauri Kusuma, assistant professor from the same institute, Sivani Institute of Management, Hyderabad. I request them to present their paper. Are you there, Puspa Chaudhary or Gauri Kusuma? They are not there, I guess.
If they're
So
not
next presenter.
responding, you get to the next one, please.
Okay. So next presenter we have Jonala Akshay Kumar, PGDM Business Analytics students from the same institute. Are you there?
Yes, sir. Yes, sir.
You can present your paper.
Is my screen is visible?
Yes, yes, you're visible.
Good morning, ma'am. Good morning, sir. I'm Jonala Akshay Kumar. Coming to my research title, it is a forecasting financial metrics in steel companies using Python linear regression. Coming to the objective, I have compare the growth, stability, and challenges faced by each company. Identify which companies are expected to grow, stabilize, or face financial difficulties, and provide data-driven insights to support investment decisions and strategic planning. Help stakeholders understand financial trends and make informed business decisions. To forecast financial metrics for the next 5 quarters up to September 2025. Coming to my research methodology, I have taken the data sources from Money Control, Yahoo Finance, and annual reports. I have used the model as a linear regression with Python scikit-learn library. I have used the matplotlib library to visualize the graphs. Coming to the forecasting period, it is up to September 2025. Coming to data analysis, I have taken the top 5 steel companies, which are Tata Steel, JSW Steel, SAIL, Jindal Steel, Apollo Tubes. These are the top 5 steel companies. My project is mainly related to the. I have taken the past 20 quarters. which includes revenue, net profit, operating profit, and profit before tax. And in my research, it has shown that the Tata Steel is declining their revenue and profitability has been forecasted. JSW Steel is a consistent growth in its revenue and profit metrics. Coming to sale is stable but fluctuating performance. Jindal Steel has a positive growth across all metrics. Apollo Tubes has a moderate, stable growth forecasted. These are the graphs of Tata Steel, which is showing that it is declining its revenue in next 5 quarters, and in operating profit is also it is showing that it is declining.
Sir, please come to finding, since you have
Yes.
many slides.
Coming to findings and conclusions, we can observe that JSW Steel and Jindal Steel, both companies are expected to experience a strong growth in coming quarters, which they can expand their capacities and strategic investments. Coming to Apollo Tubes, it has a consistent and moderate growth, which indicating the stable performance with a focus on steel pipe segment. Coming to SAIL, which is a Steel Authority of India Limited, which has a high government stake in its company. It is showing that stability with a limited growth potential, largely due to the focus on public sector projects, whereas the Tata Steel faces a challenges which declining revenue and profitability, suggesting the need for strategic changes to regain market position. Coming to the recommendation for Tata Steel, considering the strategic adjustments such as cost optimization, diversifying product lines, and exploring new markets to ensure future performance. I can say that the Tata Steel is facing a lot of decline in its trends, whereas Jindal Steel revenue has a consistent growth with a notable peaks.
So, Akshay, thank you. Your time is up. So, madam, over to you if you have anything.
No, fine. We can move to the next one.
Okay, so next we have same
Thank you.
from the same institute, Shiva Institute of Management, Buddha Lakshmi Aditya Vardhan. So Shiva Shivani Institute of Management, Hyderabad. Are you there? Then you can present.
Yes, sir, I'm there. And
Yeah.
very good afternoon to everyone and all. And thanks for giving up me this opportunity to present my paper presentation. So now would like to give my paper presentation. Sir, is it visible?
Your presentation is, yeah, it's visible.
Yes, sir. Thank you. Now coming to my paper presentation, it was titled as the study on Stockton prediction using machine learning. And coming to these objectives, the objective is to about giving a clear understanding about of the market trends, and also using by applying Python and Python tools and techniques for decision making. And also and also it was doing during my part of my internship project, so I want to develop skills in financial analytics and modeling. And coming to the introduction, the main scope is to about analyze data on stock prices and also using Python, as I previously said. And coming to the data limitations, the data availability and accuracy, and also the scope of the analysis and the tools and methodologies which may not account for all market complexities and the time constraints. And coming to my research methodology, and I collected data
You
from
can
Yahoo
skip
Finance.
this. You can skip this.
Yeah, okay, ma'am. And coming to the data analysis, I choosing the company named Apple. And coming to the historical prices, we can observe the graph of the chart which was increasing from 2014 to 2024, nearly from $25 to $200. And also the data volume, we can observe the data volume is indicating the large trading sessions are less frequent. It shows that most days have relevantly low trading volumes. And also the we can observe the moving average of 100 days. It shows that it help to highlight the longer term needs. The gap between two lines indicates volatility, where the upward trend suggests an increased price in over time. And coming to overall findings, We observed that there was generally an upward trend over time, and also the stock price have significantly increased, and also there is a slight fluctuations in this stock, and also this data is mostly suitable for the and also the stock is mostly suitable for the investors who want to invest. And coming to my data analysis, the time period for the data analysis from past 10 years data, and coming to the conclusion, and this stock price data reveals the generally positive trend with inherent fluctuations and characteristics of financial markets. Thank you.
Good work. And I think you should concentrate more on the LR and try to improvise and make this paper ready to be published in some good journal.
Yeah, okay, ma'am, definitely.
Okay, so thank you. So next we have a presenter from the same institute, Katam Vijayalakshmi and Daman Deep Johar uh, from the Sivani Institute of Management, Hyderabad. Am I audible?
Yes, you are.
Okay,
Perhaps they are not there. You can move
they
to
are
the
not
next
there.
one then.
Okay, so next we'll be moving to the next. So from the same institute, Ronit Ashok Wangalwar from
Yes,
the
sir.
Sivani Institute of Management, Hyderabad. Okay, you can
Yes,
proceed your presentation.
yes, sir.
Please go ahead.
I'm audible, sir.
Yes, yes, you're audible.
Okay, sir. First of all, good morning. Good morning, everyone. My name is Ronit Ashok Wangalwar from Shivashivani Institute of Management. Today, I'm excited to share my research title, Predicting Stock Price with Linear Regression in Python. Coming to the introduction, I have taken the 5 sectors such as FMCG, automobile, energy, health sector, and e-commerce. Uh, by using the Python with the different EMAs such as a 10-day exponential moving average is a key technical indicator. With the help of this, we can identify the short-term price momentum that offerly the views of the stock trend, and predictive model aids in forecasting future price movement within each sector. This is the industry profile that in each sector I have
So,
chosen a
go
two.
to the objective. Please go to the objective.
Okay, sir. With the help of the technical indicator, I have collected data from the NSE and BSE to predict the which sector my model is fitting closely. To develop and evaluate a predictive model using this linear regression to forecast stock prices based on the historical data, with the aim of identifying trends and pattern that aid in making the informed investment decision that will be helpful for the investment purpose. Uh, uh, with the help of the Python, in each sector, I will get this model equation. Coming to the data analysis, in e-commerce sectors such as Zomato and Nykaa offer a high predictability with the highest R square, which was 0.98, which was I have compared with the actual closing price and whatever I will get from the model building. This suggests a strong long-term forecast reliability and a lower volatility, making it potentially ideal for investment purpose. And second one, in the FMCG sector such as ITC and Marico, also perform well with the strong R square, which was 0.97. uh, with the finding, coming to the finding in FMCG sectors, it show uh, reliance and steady demands. In healthcare sector, it is stable and moderate growth. In automobile sector, cyclic in nature, and in energy sector, it is volatile but clear momentum with towards sustainable energy. And in e-commerce sector, high growth with seasonal volatility. Coming to the conclusion, analyzing stock prices across the sectors such as ARIMA, exponential moving average, linear regression, that reveals the volatility and trend of the market, which I have achieving the R square above zero point 0.9, ensure the predictive accuracy, which was 90%, 98%, adding informed investment decision. Stable sectors like FMCG or energy that offer a strategic opportunity and continuous refinement model. These are the reference I have taken from that, and
Okay,
main.
thank you so much.
Thank you.
So no need to show the reference part. Okay, so thank you so much. So, madam, over to you if you have anything.
No, I think we can proceed. In case I have anything, then I will only open my
Okay.
mic and speak. Otherwise, you can proceed. Okay.
Okay. Thank you, ma'am. So we have another presenter from the same institute, Jyoti Chaudhary. He's a DBM student from the Siva Sivan
Yes.
Institute of Management. Yeah, you can
Yeah.
present your paper.
Just a second.
In the meantime, I request others to be ready. When I call your name, please get into quickly for the presentation.
Yeah, so is it visible?
Yes, yes, visible.
Yeah. So good morning, everyone. I'm gonna do a research study analysis on stock price reactions to the corporate events. So here are the contents of the page. And coming to the introduction, as we see, the Indian stock market has been expanding numerously across various sectors. For this particular study, I have chosen three different companies from three different sectors. That's Tata Consultancy, belonging to the IT, and HUL from the consumer goods, and State Bank of India
You
from the
kindly
banking
skip the
sector.
introduction part. You go to the title, then objective, finding, and conclusion only.
Okay, get it.
Ob-
Coming to the objectives, the main objective were to investigate how these three stocks gets reacted, whether it's positive or the negative, coming when compared to their earning releases and dividends, and comparing these three with also the Nifty 50 index, and evaluating the volatility patterns and analyzing the risk and return characteristics of the TCS, HUL, and SBI for the last 5 year period. And the research methodology which I have followed, I have collected the data using the Yahoo Finance, but I used Python using the PyFinance library for historical stock prices. And the date period was since October 2019 to 24. And market index, I have taken the Nifty 50 as a standard one. And fetching the data, then calculating the daily returns. And the event window was like 5 days prior and after the earnings date. And coming to the hypothesis testing, we have the p values and t test to prove the significance levels. And the risk metrics which we got during the data analysis, we can see that the SBI has the highest beta volatility. It shows that it's very most sensitive to the market, making it very riskier. And HUL being the lowest beta, it's least market sensitive, right? And so we can say that the SBI may be best suited for the more risk tolerant investor, whereas HUL can be suited for the investors who are particularly focused on the stability over higher returns, who doesn't want to take such risks. Graphs which we got through the Python codings regarding whatever the fluctuations during the earning releases and the dividends release. And these are the key findings with the significance levels of the 5%, the p values and the t values. Though the impact of the coming to impact of stock pricing, TCS has been releasing significantly positive impacts, but when it comes to dividend, there is a very lower impact. And for HUL, dividend has shown a significant impact, and for SBI, it's a marginal significant. So volatility being SBI stable, TCS being highest, and HUL being the moderate. So coming to conclusion, we can say if a person wants to really invest, then a moderate or the low risk preferences should go for the companies like the HUL, which are into the consumer goods, and being beta value of SBI being the highest. So people who have the risk appetite or the high risk tolerance must invest in the SBI for the higher returns. That's it, ma'am.
Okay, so thank you so much, Jyoti. So
Yeah.
next presenter we have the same institute, Manisha Kumari and Dr.
Good afternoon, sir.
Balanji Reddy Mora.
Good afternoon,
Yeah,
ma'am.
you can proceed.
Yes. So my screen is visible.
Yes, visible, yeah.
Okay. So good afternoon, sir. Good afternoon, ma'am. So my title name is IPO Performance Analysis Post Listing. So coming to the introduction, what is IPO? IPO is also known as the initial public offering. When a company raises the fund from
You
public
can
for the
skip
first time.
introduction part.
So
Manisha, you
okay.
can skip introduction part. You can go to the objective.
Okay, coming to the objective of the studies, assess the post IPO financial performance through the stock trends and financial indicators. And second is analyze the market reaction and investor sentiment affecting the price movement and compare IPO performance within the differently industry sectors and evaluate the IPO pricing accuracy whether underpriced or overpriced. Identify the key success factor influencing the IPOs in the different economic condition. Coming to the research methodology, so I'm taking the data as the follow to ensure the reliable findings, the data sources of the including NSC and BSC, Tijori Finance, and Money Control. The key metrics analyze the were stock the returns and earning the per share, EPS, price to earning ratio, and the sample size I included the companies of 15, and it was the analysis including the historical and current data on the stock performance and net income outstanding the share and valuation metrics to ensure a comprehensive evaluation. So I'm taking the one example of Infosys. The notable growth over the 5 years, 174.30% return, and the P ratio calculated 28.78 above the industry average, indicating the growth potential. And EPS is 64.91, suggest on the strong profitability. And it is the calculated of current minus initial upon initial into 100, so I get the percentage return here. So 6 months, 1 year, 3 year, and fifth year. And coming to the key formula, as I told the previous how to calculate the returns, so this is the formula. And coming to the finding and insights, while the many IPOs exhibit the high initial return and long term performance varies greatly, and overvaluation of often a leads to post-listing underperformance, and market condition at the listing significantly influences short-term stock behavior, and sectorial strength play a major role. IT and healthcare stock tend outperform in the long run. This is the recommendation for investor. It is the crucial to prioritize the companies with the solid financial and realistic valuation. Companies launching the IPO should ensure the accurate pricing and the transparent disclosures for analysts, the stakeholder, and monitoring the sectoral trends and macroeconomics factor before the investing in IPOs essentials. So coming to conclusion, IPO successes is influenced by various market and financial factor. Long-term performance would be a key the consideration for investor, and analyzing the key financial metrics and help in the making inform the investment decision. Thank you.
Thank you, Manisha, for completing on time. So, if Madam doesn't have anything, then we can proceed to the next presenter. Next presenter we have with us is Shivam Biswakarma from the same institute,
Yes,
Shivani
sir, I'm
Institute
there.
of Management. Yeah,
Yes, sir.
please proceed.
Just a minute, sir. Sir, is it visible
No, no.
now, sir?